In this video, we're going to take a look at ASML Holdings, ticker symbol ASML, and been on a terrific run here since late 2023. We just pull out our measuring tool since the bottom, currently up close to 50% in a matter of months. And they just had another nice pop here. Earnings on January 24th. They had EPS of $5.64 per share versus $5.16 was the estimate from analysts. Revenue came in at $7.8 billion versus $7.4 expected. And the company did come out with some guidance saying that they expected $5.7 billion in revenue for the current quarter. Analysts had predicted $6.8 billion. So a little bit of a disappointment there. They also talked about how they expect 2024 to be similar to 2023. So likely not going to see a lot of EPS growth or anything in 2024, maybe just a little bit, but they are expecting big growth in 2025, and we see this based on the forward-looking estimates. Analysts predicting 23.6% per year average growth in EPS, so a really strong number. For reference, the S&P 500 average generally, it fluctuates depending on when you look at it, but is usually around 8.5 to 9%, so much better growth in this stock than what you'd typically find in other stocks. They've averaged that as well over the last 5 years, 26% per year EPS growth. So really strong there. The stock up 8.85% on these EPS numbers when the earnings came out. Dividend yield of 0.7%. Dividend investors might not think too much of that, but I also like to look at how does that dividend increase. The dividend amount has increased 22% per year over the last decade. So you could think of that as a 22% increase in cash flow each year if you own this stock. So dividend yield's not only the thing to look at, you also want to look at how that dividend increases, because when you pick up a share at whatever price and year after year that dividend increases, that's something you may also want to consider. If they're also buying back shares, that's called a buyback yield of 0.4%, so we end up with a shareholder yield of 1.1%. Just going through some of the fundamental things about this company before we get into some of the more technical things. How has this stock performed over the long term? It's been great. Annualized return over the last decade is 26.6%. For comparison, the S&P 500, 12.3% per year. So really strong average performance. That is even including this big drop that we had in late 2021, 2022. We just measure that out, dropped about 60%. Now, prior to that, going back to 2009, and the drops, you can see most pullbacks about 30%. So this was the financial crisis, 2008. So a big drop there, similar to what we had now. And then you have a 32% drop, rally to new highs, 32% drop, rally to new highs, 32% drop, rally to new highs. And you can see this theme playing out. This one a little bit, 34% in the same ballpark, 40 just a smidgen bigger. That was during the COVID and the pandemic scare, and then big run to new highs, and then, as we mentioned, this one a bigger decline than usual, but like these other ones have just come storming back. As we discussed, some great fundamentals going on in the company in terms of strong yield and EPS growth and revenue growth, things like that. So it's come storming back. We're almost back to new highs. And so obviously some different ways to trade this. If you're looking at these big runs for long-term investor types, coming off the bottoms, we've been looking at 190% runs, 370%, 120%. So we've already exceeded that. We're up 140% off that low, but again, this one was a little bit bigger drop than usual. So there's some long-term ways to play this in the sense that we could be heading toward new all-time highs. That's very likely and will likely be exceeded over the long term. For shorter term traders, there's a phenomenon we can trade called earnings drift, and this is a highly documented thing where basically after strong earnings, even if the price jumps aggressively like this, there tends to be a drift effect where the price continues to drift higher over the weeks that follow. I much prefer playing earnings drift on stocks that gapped at least or went up at least 15%. This one moved up a total of 11% and ended the day at about 8.5% higher. 8.9, close to 9%. So it's a little bit below the threshold that I would typically look for in a stock. But what we basically look for is you want to see just, a couple days where we move down a little bit. And starting at about 3 days after, I'll start watching for a move up where, we get the shift back to the upside, and that's where I look at going long. The stop loss goes below these lows here that just formed, and we're off to the races. Can use some sort of trailing stop loss like a 10 or 20 day moving average. And I like this because it takes advantage of that long-term, highly documented phenomenon. Now, of course, we don't know which stocks, not every stock exhibits earnings drift. It's a tendency, not a guarantee. So, of course, this one may drift up, it may not, it may drift lower, but we wait for that little pullback and then the shift up. This could also be sideways is okay if it moves sideways for a few days and then starts to move up. That would also be fine if it hangs on in that region. And it just gives us a potential entry point, and in that case, our stop loss would just go, below whatever the recent low of these candles that form. So a potential setup, more of a swing, shorter term trade to take advantage of some possible continuation of this favorable news that happened in ASML. There's also the benefit that it has some strong fundamentals behind it, a very strong track record of strong performance once it moves past prior highs. We're approaching prior highs, and it's tended to run, and this is because earnings per share are growing, revenue's growing, so that tends to favor higher share prices because investors are willing to invest in companies that are seeing growth, and that's what helps drive higher share prices. So a few things to think about in ASML, not a trade recommendation, but just something for you to consider.